Our investing letter, as of today, we're at 106% above the market and a 62.8% win rate on investments. So that's super impressive. Last year, 2024, we were 77% above the market on our paper trading portfolio. And the 2 years before that, about 50% each on the investing letter. And by the way, if anybody ever wants a trial of either, a free trial of either of them, you can always email me at George@Prospero.ai. And I'm always happy to, set people up and answer questions. I view like kind of an active relationship with users as very beneficial to everyone. For those that don't know, net option sentiment was invented on a call that I had with someone trying to teach them options chains. I try to teach a lot of people. It didn't work. Anyway, let's get into how to use the investing letter, because there's sometimes some confusion. And just to be clear right up front, what we are teaching in the investing letter and the trading letter is a methodology to analyze stocks. Our goal is not to have you buy the exact same stocks as me, do the same long short. The goal is to demonstrate a process by which you can analyze and select stocks, right? We churn through stocks pretty fast, right? One of the reasons we churn through stocks in either letter pretty fast, in the investing letter, it's our high conviction stocks, right? So for example, let's say I have a tech stock. Sometimes I will see like, oh, I'm in Broadcom, but SMCI just passed it in some key signals. It's looking better. And I get out of Broadcom, not because I no longer like Broadcom, no longer like it long-term. Stocks like that frequently are above 80 upside breakout, which, that's our best back-tested signal. Obviously they test forward in conjunction with each other, but when we tested upside breakout of greater than 80, the population of those stocks historically, if you bought all of them between like 10 and 50 on a given day and held them for a year, 80% of the days we tested in a 5-year back test, those stocks beat the S&P 500, that basket of stocks. So very reliable in including having a lot of upside. So I share that by saying like, any stock that has above 80 upside breakout is a great stock to own for a year. So I would say almost all of the stocks that we pick are going to be above 80 upside breakout. So you could look at any of the ones, whether I'm adding or dropping them. It's more, if you want to follow what I'm doing, being very selective in terms of keeping the best in a certain sector, you can do that. But you can also say, hey, George is buying AppLovin, SMCI, Broadcom, all of them. I could just pick my favorite and hold that. And that's a perfectly appropriate way to follow the strategy. The other thing that we share in the letter is just how long short we are, right? And for some people, shorts are not on the table for you. So you can use the long short capacity to adjust some of the ETFs that we recommend. So if you have, say, 5 longs and we recommend, this is at the bottom of the page section, 10% in SQQQ, we're at 9%, but we're making the numbers easy. Then you can simply divide the rest of the longs amongst that, right? And you're still kind of getting that hedging behavior, right? Because we know not everyone can follow it. But what we're doing when you look at the bull screener, you can also or the bear screener, you can also just go down. We share that whole screener so you can look at what resonates the most with you, right? We always make sure there's small cap longs, mid cap longs, large cap longs, and same for shorts. So you could say, hey, I'm looking for a new small cap stock that looks good in the Prospero screener. I'm going to grab that, right? That's why we share the whole screener. What we're doing with the investing letter is we're showing you how we think about portfolio management given where SPY, QQQ, net option sentiment are, given where we see the market caps and the sectors performing. We're rounding all of that information, taking you through our process so you can see how we manage a complete portfolio given that. And there's little hints you can take from that, right? If we are grabbing 3 tech longs and 1 tech short, right? That means we're pretty bullish on tech. We don't frequently grab, energy stocks because energy financials, they tend to run lower in things like option sentiment upside. because there's less options speculating on more stable dividend type stocks, right? So that all being said, sometimes we will expose ourselves to energy, but we'll do something like one long, one short, or sometimes we'll just be short, right? That's an indication that we don't like the energy sector. So you can always take, what we're grabbing, and you could even just be like, wow, Prospero has an energy long. They rarely have one. Maybe I should take this more seriously, especially if I don't have energy in my portfolio. If I don't have, healthcare and they're adding Cigna, which we've added before, that's a more stable stock, right? So there's a lot of hints that you can take from what we do to help your portfolio. Then obviously in the paid section of that letter, we have the momentum score stocks. And those are going to be higher risk, right? Because they're more pure momentum. There's a reason that the bull screener is for everyone and the momentum screener is for just the paid users. For paid users, we tend to give more advanced strategies, right? So you can view those momentum score picks as stocks that could do better than what's kind of in our safer portfolio, but they could also do worse. What we put in that kind of safer bull screener, you see we added EPS divided by sector this year, and we added how close something was to the 52-week high. That is all to adjust for the conditions that we're seeing, and that you can always read into, right? We're prioritizing, those are value metrics that we've added to the screener. We're prioritizing value more in this market. So there's always a lot to infer. But at the top level, just to make it easiest, you can also look at everything we pick as just ideas. If you want to look at all the longs, all the shorts that we put in and say, I actually just want to grab the top of the bull screener because they grabbed it, and I just want to take that idea because it looks like their best idea. That's the reason that we do it. That's the reason we show you the process and all the information, because we want you to take away parts of the process just as much as we want you to take away the whole portfolio.